Good morning, Steve Reed in Nashville. This morning I'm here for a Farm Journal Top Producer Summit panel in which the panel is going to discuss the outlook for long term for the grain exports. As far as the markets are concerned, soybeans are down about 7 cents. We've got corn up a penny and wheat up 7 cents. Stock market's lower, dollars higher. Crude's about unchanged. You've got gold and copper lower. I think that the soybean market's finding some pressure because of the rains in Argentina. Talk about a record Brazil soybean crop and a lot of unknown about Chinese import demand for U.S. soybeans. Right now, open sales, either the unknown or unshipped to China, is cheaper to switch to Brazil. And so southern Brazil is dry. Central and northern Brazil is wet, which is slowing the harvest there a little bit. But it still looks like they're going to have a 150 million ton crop or higher coming to the marketplace. And with the farmers lacking storage for as much as maybe 30% of the crop, those farmers will have to be forced sale into the market, which would probably push Brazil export prices even lower. Argentina's getting some rain. We don't know if enough to add to the crop, but potentially it might be enough to stop the crop from getting smaller, except farmers not selling anything down there in Argentina. In the U.S., big storm moving out of eastern Texas up in the Ohio River Valley, providing shower activity and even snow in Chicago, with the biggest snow band around central Indiana. Long term, I think we're looking at some dryness in the southern plains. Next week we could see some snow, but we're looking at a polar vortex across the country, bringing colder to the normal temperatures. Right now it doesn't look like it's going to get cold enough to stress the hard red winter wheat crop, but wheat has added 30 cents since the Monday's lows on maybe some concern there and the weakness in the dollar. The European and the Chicago wheat markets all have record short position by the funds. Over in the corn, I think the market's hoping for a demand shift out of South America, especially Brazil, to U.S. corn exports. So this week's ethanol data and exports is pretty important for demand. I think that supposedly, even though they're on holiday, China might be looking for nearby Ukraine corn prices and new crop Brazil corn prices versus the U.S. So I think the markets right now are at least on the soybean side, trading demand. On the corn and wheat side, trading an oversold technical position, weaker dollar, and hopefully some demand down the road. But I think that as far as Russian wheat prices are as cheap as they are, and as with Brazil corn prices getting cheaper and maybe soybean prices getting cheaper, that will slow demand for U.S. exports and offer resistance to the marketplace. January cash, soybean, and corn prices to the farmer is second highest ever, and so they should be increasing cash sales at these price levels.